The market's bleeding here today with Google down 3.5%, Tesla down 7%, Apple, one of the safest companies out there in a lot of people's minds, down 5%. There's one major reason for this, and we're at such an interesting time in the market. I want to tell you what I'm thinking right now because there are some great opportunities out there. There's a link underneath the video as well if you want 15 free stocks from Moomoo. Use that link underneath the video. Start depositing here today. Now, like I said, the NASDAQ is down significantly, down 3% plus today. S&P is down 2%, and then Dow's down significantly as well. A lot of companies are looking like they're interesting pricing right now. Now, the reason that the market's falling is not due to the DXY. We've seen that so much recently with it just racing up. Fact is, it actually has come down a little bit here today. It was almost at 115 yesterday at one point. Now it's 112.3. So it's actually coming down. Same thing with the 10-year Treasury. We were up near 4. Now it's come down a little bit to 3.76. So it surprises a lot of people. What is causing this to happen in the market then? Because look at some of these prices before we get to why the market's falling. Tesla down at 270. Now that's still pretty good compared to the overall market on the year. Tesla's held up pretty well with it actually being up over the last 1 year. But when you look at what they have coming up, right? They have AI Day tomorrow. They have deliveries coming this weekend. They also have one of the fastest growth rates in the world right now in terms of companies, and they're EBITDA positive. They're growing their free cash flow like crazy. And they also have a great cash position as opposed to a lot of the other companies out there in this kind of business. It's looking like a pretty good valuation right now with everything coming. Same thing with Alphabet. When you look at them, 18 price to earnings ratio. The S&P 500 was over an 18 price to earnings ratio last year. We have a forward ratio of 16.4. Now, some people are worried about their advertising business because that's their main source of income with a possible recession. But look at this. Look at their cash position. They have $100 billion worth of net cash. It's crazy. Also, we have Apple, $142, dropping 5% here today. One of the safer companies out there. Also, a great company with growing subscriptions. We have so many great companies that are down so significantly. And then we have something like Palantir that's bucking the trend and is actually up a little bit here on the day. So what is happening? Well, yesterday we did announce that the UK was enacting this unlimited bond purchasing, basically trying to help stop liquidations and improve liquidity in the bond markets over in the UK. Now, this is basically an unlimited money printer. So that obviously pushed up the market a little bit yesterday. It's overall not that good of news, though. The fact is they have to come in and inflate and protect because otherwise it will destroy markets. And that's not a good thing. That's basically saying, yes, we're going to continue quantitative tightening, but we also have to go in quantitative ease at the same time. So that's just going to keep inflation higher for longer. We got news today of German inflation soaring to double digits for the first time in decades at 10.9%. Crazy. And while the U.S. is possibly, hopefully, lowering inflation, Germany is continuing to see higher and higher inflation, especially because of energy. And they just announced that they're going to turn back on the money printer and have a $200 billion or 200 billion euro package to shield against surging energy prices. This is mostly due to the Russia-Ukraine battle. This is going to include gas, electricity price breaks, and cut in gas sales tax. They say the prices must come down. Now, obviously, they're in a tough situation with all these energy costs just skyrocketing. But I saw someone say this on Twitter, and I think this is a good point, that you can cut a pizza into more pieces, but it doesn't actually give you more food. And this is what a lot of countries are doing. They're inflating to help solve problems, but it doesn't help if you look overall as a country, right? You can help these people out, which is probably a good thing because they're helping them against these kinds of explosive energy prices. But the fact is this does hurt your economy. This does hurt your money supply. So it's another country, another big country that has to quantitative ease while they're quantitative tightening because there's no other way around it. Otherwise, their economy is going to collapse. Hopefully, we don't have to do that in the U.S., although we're already seeing that, right, with the Inflation Reduction Act. Now, that wasn't really necessary as opposed to, I think, some of these things that's more of a political ploy, I think, by the U.S. government, as opposed to just trying to save people's lives and save people a ton of money. And same thing with the UK, right? They're trying to prevent a bond collapse, but we didn't need it. We don't need $700 billion or whatever that was in terms of this inflation reduction, because it doesn't actually reduce inflation. Now, crypto is holding up really well. When you look at this, Bitcoin's up on the day. It's up 0.6%. It's actually around 19,500 at the time of this recording. BNB's up. We have some other cryptocurrencies up too, like Ethereum. And overall, I think this is kind of positive. I would rather see crypto in the positive when the market's down. Some people are saying this is a decoupling. Now, I don't necessarily think that's the case. I think that when we do see these different things happening to other countries, I think that is a positive for crypto, because what did Bitcoin do today? It produced the same amount of blocks that it did yesterday and the day before. It had the same amount of Bitcoin that it released to miners. It has the same inflation rate. It's unchanging. It's trustless. And when you see so many countries having to jump through all these hoops and having to inflate, have quantitative easing and quantitative tightening, makes you want this kind of trustless, borderless cryptocurrency. Now, I don't necessarily think that's why Bitcoin is up today. I don't think that's the case, because most people are investing in Bitcoin for the ability to make more money. And honestly, if everything falls, Bitcoin's going to fall as well, typically. But I think we do see these kinds of uncorrelated days every once in a while. And I think we have shown some pretty strong support around this 18,500 mark that we've been at. And now we're just floating a little bit above that right now at 19.5. So I would like to see this continue, but we could definitely fall further. If we fall below that 18.5, we could definitely fall below prior lows as well, because that's just at 17,800. I would not be surprised, because we are close to lows on the NASDAQ, and a lot of companies are falling down way past where they were back in June, like Google, right? Back in June, it was around this 108, 106. Now it's around 96, with a lot of the fears of recession, global collapse, and everything else that we're seeing. Now, we do have PCE numbers coming in tomorrow. Be on the lookout for this. We got 6.3% in July. If we see a good number coming in, I think that's definitely going to pump the markets. We also have CPI data coming in less than 2 weeks now. So there are a couple big events here coming soon. Now, personally, I really like these prices. For me to be able to buy Tesla at $270 when it was just $310 just a few days ago, honestly, I count that as a blessing. They're growing so quickly and are so profitable, and a couple of their factories are just bleeding money right now. They haven't even gotten into their most profitable business, which I think will be robo-taxis and or Tesla bots. So I think they're growing so quickly. I am happy to pay $267 a share. So today I'm buying Tesla. I'm also buying Google. So Google is a great company as well. Obviously is going to be hurt if we do go through recession. It's going to be hurt from advertisers. They could have less earnings this year than last year, but I still think they are dominant. They have a great moat. They have a great cash position, and will still make a lot of money over the long term. I'm also buying Amazon. I don't have it pulled up here today, but I buy Amazon really regularly too. People are still going to buy. Now, of course, people are going to buy less. There's going to be less discretionary things that they buy from Amazon, and less advertising is going to be coming through their door as well. But I still think they're going to do great, and they're still, I think, taking market share from a lot of the traditional retailers. So I'm buying Amazon as well on their weakness, buying a little bit of Apple as well, buying some VOO, buying some Microsoft because they have a lot of subscription revenue. And then I also will be selling some puts for Palantir because I still like Palantir over the long term, but I'm going to sell some puts to get some passive income in the meantime as well. Now, I am buying Bitcoin as well. Not today, but I have bought some Bitcoin this week. I still love Bitcoin for the long-term outlook. I still think it'll do well. Now, we could still see a lot of downside from here, in my opinion. If the markets fall another 10%, let's say on the NASDAQ, it's possible, right, with everything going on. I think Bitcoin would break through prior lows, and it usually moves faster than a lot of the traditional markets. So if NASDAQ falls down 10%, I wouldn't be surprised to see Bitcoin go down 20 to 25%. Now, I still have cash on the sidelines, and I am hoping to be able to buy some real estate too. So that is where I'm at here today, but I'm happy. I'm very happy to be buying some of these companies at these prices. Now, let me know what you're doing today. Check out the link underneath the video to Moomoo, because again, this is a lot of money that they're giving you if you just sign up and deposit. And I'll see you in the next one. Bye.